Oh, right. What is going on? We have the day. The day is here. The what is going to happen? What what is going to happen? I wonder what hilarity we're going to be going through today. We're going to be checking out the FOMC live for everyone to be here and clear and everything else on that side. So be cool, come back. Make sure that you share. You make sure you press the like. Make sure you do all that kind of stuff. Make sure that this thing goes absolutely viral everywhere. We need as many people here. As you know, that TikTok has taken my account down, so it's I need all of you guys to push out as much as possible. Very, very much appreciated if that could happen. I mean, I'm not asking a lot, but like kind of asking a lot. You know what I'm saying? Hello, Mr. Crofter. How you doing? Wow, all the likes. Thank you so much. Appreciate all of you guys. There he is. Wouldn't miss FMC with Alvarez for nothing. Thank you so much, Eli. I appreciate it. We cooked. I don't know. But you know what's really surprising? We're bouncing from the exact zone. I was like, if it just passed it would be absolutely amazing. But unfortunately, that's not. The rate's held. Trump gonna be. I mean, I thought the rate was gonna be held anyway. I would have been extremely surprised if they hadn't held. Like extremely surprised. Because uncertainty and all that kind of stuff. In it, Brev. That's the thing. So we have to be careful and I have to understand what's happening on that side. To be honest, I think the markets might actually like the fact that it hasn't been done. I would say it's pretty much priced in at this present moment, to be honest. To be very clear, I think it's pretty much priced in. I mean, let's have a look at the S&P 500. What's that doing? Yeah, I mean, it's gonna be pretty much priced in. We'll see. I mean, we've closed a higher high from the previous high, so I would be surprised if we don't move up from here. Now, what is important what is important on the other hand is the question and answer is going to be, it's gonna be something. Just came on. Are we going up or down? News. We're waiting. We're like, it's nothing will happen as of right now, right? Rates have been held exactly how they are. It's not going to change anything. Nothing is going to change at this present moment. But what is going to change, it is when the question and answers happen. And that's going to be something. It's going to be something. You guys absolutely appreciate it. I appreciate all the likes and everything else. Make sure that you guys share it as well. And we will see... We'll see what happens. All right, okay, let's get this going. All right, let's have a look at what's happening with the stuff. Let me try and find this would the FOMC have be on 1 second, because I want to be sure that it's nice and live. 1 second. Should I cancel right now? It's up to you. I mean, like, there's a possibility it can go up and down. It depends on what he says. I wouldn't do nothing. I would not do nothing. Hello, Marco. How are you doing? I appreciate it all. You guys are absolutely incredible. Honestly, it means a lot that you guys are here and following me. When even though we go through all the ups and downs of the industry that we are in, but it means a lot. Orange Man is going to be to blow a gasket. He's going to mention energy cost, tariffs. Powell is smart. Like, Powell is smart. That I agree with you completely. He is going to do something, right? He's going to make him look silly today. This is all planned. All of this is planned. I'm just saying, this is all 100% planned. Where would you see the FOMC? They have their own Federal Reserve. There we go. Okay, cool. Yeah, boy. Yeah, boy. Okay, let's keep that there. Nice and quiet. The music. Okay. Trump getting rid of him. What would you do in this position? Look, you need to understand this, right? Why am I not getting greeted? Hello, Punk. You're always greeted. What are you talking about? I just didn't see you. I was getting too down and dancing with the tunes. You know what I'm saying? I was at a really interesting event today, actually, in the UK. It was a crypto for good, and it was full of investors and interesting people. I saw the head of Jito and Cardano and all those type of people. It's really interesting. Hello, GBL, Gbal. I'll call you Gbal. I don't know, brother. When you think we can when do you think we can at least break even like 53 dominance? I don't know. Yeah, I haven't been able to check out the deal with the program, which has been really busy. They're also dealing with a whole bunch of that's pump music. It is some amazing music, man. What are you talking about? What are you talking? Are we ready? Are we ready? Okay, I'll stop this. Hey, is there own music? I don't know. Hi, is there anything to tell us about Fat Cat? Everything is going to be coming at this present moment. I've lost my account due to various reasons, hackers and all this kind of stuff. I mean, what can you do? You know what I mean? So I'm trying to sort all that stuff out. All of that stuff is coming. Everything is being done. There is an amazing application that was being built for Fat Cat that's being tested at this present moment. You guys are all gonna be very happy when it happens, and then all the marketing and everything I'll push will happen from there. It's something that's in the works. Right. At the same time, there's going to be an amazing trading thing that's going to be happening. A whole bunch of cool things are coming your way, and pretty much that, like, you know, Netflix. I can't wait for Q&A. I'm at work, but got my snack and headphones on. Oh my god, the Q&A! I can't wait either. It's going to be something special, that's for sure. It's going to be something special. I also met one of the main guys at Chainlink as well. That was really interesting. One of the main devs that came out of Chainlink. Really interesting dude. Yeah, really, they're really sort of, they're special people, these people that we met today. It was really cool. And also there's a project that I'm working with at the moment called Dial, right? And it is something super cool. Super. What happened to your TikTok account? A hacker took it. He basically review bots. Bots you, and if you don't pay him, he keeps doing it over and over again. That's why I've been banned like 5-6 times. And TikTok this time doesn't look like they're interested in giving my thing back. But it is what it is. Yeah, the feds. God, you guys are incredible. Yeah, where are we going? Nothing. So at this present moment, look. I mean, if we look at USDT dominance, we look okay-ish, right? Ish. This is nothing to be maybe the new TikTok owners will. No, that's for America, not for the UK. It doesn't matter. They just don't care. They genuinely don't care. Now look, if we look at total, technically, look, we're building higher highs, right? Higher highs and higher lows, which are good. I still think we will come and test this area here. The 3.04 is going to be extremely important, right? It's super duper important to get to that level and move from there. Maybe the new TikTok, yeah, they're not going to do anything. You can tell, like even now they're throttling my live because of the way it is. It's just the situation of how it is. Even if you share it, it will not bring in anyone new. I'm basically not visible to anyone at this present moment, so that's just the way they are. You know, it happens. Now, I appreciate the share. You guys are absolutely, it's amazing. Now there's still the 3.04. This area here is extremely important. We passed that on its Zoom time, right? It's Zoom time at minimum that we will go potentially test now. But right now it is. Everyone is doing what we're doing. Everyone's like, yeah, I didn't get a live note. No, you won't. You won't. That's why you need to follow me in all the other areas. Otherwise, you just won't see it. It's a sad nature of this place, right? So we have to deal with what we have and play with what we have and do with what we do. It is what it is, you know. And if TikTok makes it easy for these people to do what they need to do, then that's part of their plan. Evening, chaps. Hello, Meme Coin Lee. How you doing, everyone? You guys are absolutely incredible. Honestly, it means a lot. Where are we? Thank you for all the lives and everything else. So look, this is where we are right now. And I would appreciate if you guys could like get it to like 20,000-30,000 likes. Come on. Give a brother a like, you know what I mean? Good afternoon. Hello, Gus. How you doing? By the way, if anyone can drop the lives into the... Actually, let me drop it myself. I'm a big boy now. I'm a big kid now. One second. Let me just see one second. He's not... Look, you need to understand. Look, he's doing something right now that's for the benefit of the country. Him not cutting is... the markets will react well to it if the Q&A doesn't come back and it's not an absolute, like, if it's not... I can't say any of the words, but you know what I mean. If it's not like terrible, you'll see the markets will react well to it. Markets like a Fed that is stable and looking out for the benefit of the country, right? Because right now, with the dollar starting to move back up again, with all of the things that are working in the right direction, if you look at where are we here? Where the funds rate? If you start seeing this type of stupidness, they are never going to cut. They're not going to cut. I mean, I'm gonna explain to you. There's no way they're doing this right now. The fear is inflation. Right now, the fear is unemployment. Fear is pretty much settled away. There is no unemployment issue, especially as the government now is not providing all the jobs that was creating this growth. All those things are going away. So right now, it's like, cut for what reason? Cut could potentially only bring in more inflation, right? And that's going to be the problem. That's the problem that we're facing at this present moment. So I'm not surprised he didn't cut. Although usually when the Fed does a pause, well, this is where things get a bit juicy. Do you know what I mean? Actually, why is KB... Is he streaming? Why didn't he just come to... Oh, God, 1 second. Let me get him on live. Look at Alright, I just messaged him. Yeah, so that's the situation. Good evening, Cryptus. How you doing, brother? I wanted to bring on one of the... yeah, today's been a bit of an interesting one. As I said, I've been at an event all day. Really cool, interesting people. Like, really, really interesting people. There's one really cool project that I'm consulting for, and you guys might be interested. I might be able to bring all you guys in for, how can I say, to test it out and try it. But it's wallet-to-wallet communication, and the people who want to communicate with another wallet actually sends a feed to be able to attach it. And it looks like there's going to be famous people and all those kind of things are going to be involved. And we'll be able to create like mini communities and have like streaming sessions and stuff like that. It's a really, really, really interesting tech that they're building. They've done some really good stuff on that side. Thank you so much, Road. You guys are absolutely amazing for pressing all the likes. It means a lot. Yeah, so look, this is where we are. We have to see right now. All right, okay. Just, what's the point of doing that? 1 second, I'm just talking to it. We have a really good trader in the sort of the alpha hunters group. Just come to the stream, stream and watch. Yeah, hello, Mr. T. How you guys doing? Means a lot, right? So right now I would be in a your screen is on top of KB. Really? That's awesome. How'd you guys like KB? He is such a cool guy, honestly. Like, it's been a while since I've been able to find someone that I genuinely like, that's talented, and it's also like I want to foster his talent a lot in our group. So like be able to grow what we have and for anyone to benefit from his talents. He's a really, really good guy. And I feel like he's been, you know, he's not being utilized to the best of his abilities. And I feel like some people may have, you know, taken advantage of him. And I hate people taking advantage of people. You know, I like to foster talent, and he's a good guy. I'm gonna make him famous, that guy. I'm gonna make him famous. Whatever. Either way, one way or another. Kyle Bolton. Wait, is that you, KB? Is that it's you, my man? How you doing? Yeah, so I'm gonna be doing all that kind of stuff. You can watch it on your stream as well if you want your guys to stream with you. But next time, come join. We'll do a stream together so you guys can all be there and everyone can get introduced to this amazing gentleman. Good evening, lads and lasses. Hello, George. Hello, how you doing, my man? Wait, is there any news on this? Or are we? 1 second. How are we looking? No, nothing. Nothing yet. No, nothing yet, man. Only disco tunes at this present moment. FOMC disco tunes. Are we gonna pump? It all depends. And I mean, it all depends. It all depends on what this guy is gonna see. He's starting. Is he starting? Why can't I see it? I'm on the actual. Yeah, I put it off. Aha! Oh my god! Oh my god! All right, let's go. Hello, everyone. Bullish. Good afternoon. Bearish. All depends on what this dude says on this question and answer. Can you tell Powell to hurry up 40 in 30 minutes? Oh, here he is. Wait, why isn't the sound? It's maybe because why is it? Let's rumble. Let's rumble.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
Yes, it will take over the space. Until the stream on YouTube, then we go. Yeah, Kyle, man, of course.
On a firm footing. While job gains have remained low, the unemployment rate has shown some signs of stabilization.
Okay.
And inflation remains somewhat elevated. In support
Problem.
of goals, today the federal
Purple tie.
decided to leave our policy unchanged. Having lowered our policy rate by 75 basis points over the course of our previous 3 meetings, we see the current
oh man, that's gonna be better. Can you hear it?
To promote progress toward both our
just why you just go here and you'll see everything. It's just better. Go here, you see everything.
Monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace.
Good.
Consumer spending has been resilient.
Yes.
Business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. The temporary shutdown of the federal government likely weighed on economic activity.
So why would you not cut then?
But these effects should be reversed as the reopening boosts growth this quarter.
Bad echo, mate.
In the labor market, indicators
There's an
suggest
echo?
that conditions may be stabilizing after a period
Is that better?
of gradual softening. The unemployment
Oh wait, I got an
was
idea.
4.4% in December and has changed little in recent months. Job gains have remained low.
How about that? Is that better?
Total non-farm payrolls declined at an average pace of 22,000.
How's that? Is that better?
For the last 3 months.
No echo, right?
In government employment, private payrolls rose at an average pace of 29,000 per month. A good part of the slowing in the pace of job growth over the past year reflects a decline.
We stay here to love and support
in
small
labor
creators.
force
Shut
due to
up.
lower immigration and labor force participation.
Thank you, Cryptus. I appreciate it.
Though labor demand has clearly softened as well.
Right, if it's softened, why are you not cutting?
Indicators including openings, layoffs, hiring, and nominal wage growth show little change in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index indicate that total PCE prices rose 2.9% over the 12 months ending in December, and that excluding the volatile food and energy categories,
It's on maximum the volume, man.
PCE prices rose 3.0%. These elevated readings
How about
largely
that?
reflect inflation in the goods sector, which has been boosted by the effects of tariffs. In contrast, disinflation appears to be continuing in the services sector.
Okay.
Near-term measures of inflation expectations have declined from last year's peaks, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people.
Right, but so you're not cutting
At
because
today's meeting, the committee decided to maintain the
Yeah.
target range for the federal funds rate at 3.5 to 3.75%.
right. Why?
Since last September, we have lowered our policy rate 75 basis points, or 3/4 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize
Wait, this is the
labor market
neutral rate?
while allowing
Really?
inflation to resume its downward trend toward 2%, once the effects of tariff increases have passed through. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset
That doesn't
course,
make sense.
and we will make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy.
No
maximum
cut because
employment
jobs
and stable
are
prices.
decent, but inflation is
We remain
elevated.
committed
Yeah,
to supporting maximum
I understand,
employment,
but it's
bringing inflation
the
sustainably
the
to our 2%
target
goal,
rate and what the
keeping
rate of
long-term
inflation is right now
inflation
is
expectations well anchored.
within the margin of error.
Success
It
in
doesn't make
delivering on
sense.
These goals matters to all Americans. We at the Fed will continue to do
He
our
said that
job
housing
with
is weak. He
objectivity,
said that,
integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
Oh boy, here we go. Here we go.
Hi, Chris Rugaber at Associated Press. Thank you. I wanted to ask that you attended the Supreme Court hearing last week on the Lisa Cook case, and Treasury Secretary Scott Bessent criticized that as political. Can you say why you attended and what you would say in response to the Secretary's criticism?
So let me start with, I don't respond to comments by other officials, whoever they may be. It's just
He seems so sassy right
I
now.
will tell you why
I can see the sass on him.
I would say that that case is perhaps
This is
the
power
most
sass.
important legal case in the Fed's 113-year history. And as I thought about it, I thought it might be hard to explain why I didn't attend. In addition, Paul Volcker went to a Supreme Court case famously in, I guess, 1985 or so.
Girlfriend.
So it's precedented, and I thought it was an appropriate thing, and I did it.
Great. And then just quickly follow on the job market. You mentioned last month that the household survey might be distorted, and you also mentioned the potential for overcounting jobs, which would suggest that we're still in a negative hiring pace. So do you see the drop in the unemployment rate as solid? And what's the basis for saying that things have stabilized? Thank you.
So, yeah, really two questions. One is, so we're getting through the distortions in the data from the shutdown. However big they were in November, they're smaller in December. So we're getting to a place where they're no longer material. They're still there, but it's a tweak here and there.
Right. So
The reason why we changed the statement, let me pull it out, was simply, it used to say that judges that downside risks to employment rose in recent months. So we saw, data coming in which suggests some signs of stabilization. I wouldn't go too far with that, but some signs of stabilization.
There's no way it's
Also
stabilizing.
some signs of continued cooling. And so we thought that was no longer an accurate description of the data. In addition, the outlook for economic activity has clearly improved since the last meeting, and that should matter for labor
We're
demand
cooked
and
bear
for
market. Yeah,
employment
it's
over time. So for those two reasons,
this type
we
of
thought
pause
we would take that language out of the statement.
is usually the moment after everything goes a bit haywire. So far, he hasn't said anything bad though.
Chair Powell, you've generally avoided engaging with political controversies directly, and the video statement on January 11th was a departure. What made this different, and are you concerned it could draw the institution further into political debates?
So today I'm simply going to refer you to the statement that I made on January 11. I'm not going to expand on it or repeat it. So
Ain't gonna repeat nothing.
This is really about the press conference and the economy and what we
This
did
is him
today,
inside.
and some ancillary areas, but I'm not going to be getting into that.
Can you say whether the Fed
Girlfriend.
has responded to the subpoenas?
I have nothing for you on that today.
You ain't getting it. Nothing out of me.
From Bloomberg Radio TV. Have you made a decision on whether
Although I
you
started to see
would
lower
remain
mortgage
as
rates.
governor of the Federal Reserve?
Yeah,
If so,
the
tell
what's it
us what
called?
is, and if not, when might we
The-
anticipate a decision?
No.
Interest
and,
in this
I
decision doesn't
really,
affect
once again, have
mortgage
nothing
rates.
for you on
That's to
that.
do with
Why would you
yields.
want to leave it all under the circumstances?
Again.
He's kept it.
Yeah.
Oh,
I don't want to get into that. It's not something I'm. There's a time and place for these questions, but not something I'm going to be getting into today.
but why? But we all want to know what's happening.
Claire Jones, Financial Times. Thanks a lot for taking my questions.
This is gonna be a good question. I can feel it.
In another one that might,
I can feel it.
similar answer.
Come on, Michelle.
We've seen quite big movements in the dollar over recent days.
Ooh.
What do you think is driving the US currency lower? And have you been at all concerned just by the extent of the volatility we've seen this week? Thank
She's
you.
desperately trying not to say.
Probably know, we don't comment on the
Trump.
dollar. Really, the administration, especially the Treasury Department, has the job of oversight over the currency and exchange rates and all that. We don't comment on that. It's not our role.
True.
So.
But you really want to comment, don't you,
What's your
bro?
view on the market movements? I mean, what do you think behind them? Is it asset managers diversifying? Is it?
Yeah, I just don't. We don't.
But you really do, right?
We don't talk about what
You
moves
really
around.
wanna say something.
It's just not appropriate.
Pal,
for us to
say
do
it.
So really, the Treasury Department.
Pal, say it.
has that. It's their role, their bailiwick, and we stay off it. We do monetary policy and some other things.
Say it.
We don't comment on the dollar. Sorry.
You can hear the rude words going on in his head.
Hi, Chair Powell. Neil Irwin with Axios. Obviously, no SEP in this meeting, but in light of the
Powell's
slight firming
weak.
up of the
Oh,
long-term
I don't
growth
know.
in the
I
labor
don't think
markets
so.
and statement,
I think
should
what
we assume
he-
that the timeline for any
I
further
don't
rate
think he
cuts
should have
is
paused,
pushed
though.
back
I do
compared to
agree
what
with
people
you,
might have
Mark.
thought in December?
Well, first of all, if you look at the incoming data since the last meeting, clear improvement in the outlook for growth. The data have come in, and sentiment, the Beige Book, everything comes in suggesting that this year starts off on a solid footing for growth. Inflation performed about as expected.
It does?
And as I mentioned, some of the labor market data came in suggesting, we're
We're on a
evidence of
solid
stabilization.
footing.
So it's overall a stronger forecast, really.
Did I
That's your
miss
question.
something? I feel like we're not.
I'm not sure I
What?
answered your question.
What? We're on a solid
But in terms
footing.
of, timing or pacing of any additional easing.
So we haven't made, what we'd say about this was that after this meeting, after the 3 recent rate cuts, we're well positioned to address the risks that we face on both sides of our dual mandate, and we'll continue to make our decisions meeting by meeting based on the incoming data, the implications for and the outlook and the balance of risks. Haven't made any decisions about future meetings, but the economy is growing at a solid pace. The unemployment rate has been broadly stable, and inflation remains somewhat elevated. So we'll be looking to our goal variables and letting the data light the way for us.
That's a good thing he's saying. Very, very good. Cool. Sometimes it's not about the rates, it's about his sentiment, which is
CNBC,
good.
Sticking with questions you might answer, thank you. You had previously, I believe, described the current policy rate being at the higher end of neutral. And if you look
Yeah.
at the longer run,
Yeah.
the SEP and the longer run rate,
That's a good question.
16 of 19 officials are actually below there on their long run. Is the Fed still in a process of bringing it down towards a middle range of neutral? And what would it take to get there?
That's a
So
great
the count I
question.
did was
That's a
that
great
4
question.
of the 19 were at or above that. And maybe I missed by one, but I thought it was 4. And if you look at the dealer
That's a
survey,
great question.
it was 10 out of 58 where we're at or above. So you're right. It's the higher end of the range. What we say is it's within the range of plausible estimates. This is the higher end of that range. But for some people they think it's neutral. I think, and many of my colleagues think, it's hard to look at the incoming data and say that policy is significantly restrictive at this time. It may be sort of loosely neutral, or it may be somewhat restrictive. It's in the eye of the beholder, and of course, no one knows with any precision. So
Give a direction. Give a
I
direction.
get what you're saying, but
Come on.
some
Say it.
officials have described
It's like he wants to say it.
mode of bringing it down eventually over time. Are you still in
Is
that
this
mode,
the
or is this
neutral
a
rate, or
place
is
to
it
hang out?
above what you expect the neutral rate to
I
be?
would say, if you look at the SEP from December, most people had additional normalization. But at the same time, we've done a lot of the process of normalizing. A good piece of it is done with 75 basis points, and before that, 100. It's 175 basis points we've
Right.
cut since we began cutting in September of 2024. So you've moved now to, 3 point, Fed funds is running just a little below
Okay.
3.65%. So you've moved a good way.
Uh-huh.
And we think we're well positioned here to watch how the economy performs, look at the data. We're not making
cut is being
decisions about
reactive.
future
This ain't
meetings,
good.
but we do think we're well positioned after those 3 cuts to let the data speak to us.
Chair Powell, Mara Moakman from
It's that
To what extent
read
did
between the
did
lines.
committee discuss the possibility of cutting at this meeting or in March?
Come on,
And how are
Amara
y'all thinking
Mawake.
about the conditions that would merit another rate cut? Is there broad agreement on the committee about what it would take?
Oh, great. Love that
So,
question. Awesome
there was
question.
broad support
I
on
like the questions
committee
today. It's good questions.
For holding today. Broad, I would say, including among non-voters. So that's where that was. Of course, some people did want
okay.
to cut and dissented, but committee pretty broadly for holding today.
Okay.
We're not trying to articulate a test for when to next cut or whether to cut at the next meeting. What we're saying is we're well positioned as we make decisions meeting by meeting.
Yeah,
looking at
this
the
is looking like
incoming
the
data,
this is
evolving outlook and all
this is
that.
what they believe is
And,
neutral rate at the moment.
We're in a position where
That's what they're looking at, which
you know,
means
we
no
have to- we still
real
have
rate
some
cuts for the
tension
foreseeable
between
future.
employment and inflation, but it's less than it was. I think that the upside risks to inflation and the downside risks have probably both diminished a bit. So, we'll be looking at that. It's about how you weigh the risks to the 2 goals and how big those, and quantify them. And so there's
Yeah,
different
but
views
you
on the
could
committee, and,
see-
we'll find our way forward as
You
the
you
data
could
evolve.
you could push it a little bit. You could have cut today. You could have cut.
Thank you, Mr. Chairman. Edward Lawrence from Fox
He
Business.
could have cut today.
Has the effects of tariffs already moved through the economy on prices?
A lot of it has. So basically,
No cuts until 20.
there are many different
He's
estimates,
giving that.
and
He
they're
could have
all
cut
highly
today.
uncertain, but
He's being
most
too.
of the
That's too
overrun,
cautious.
in goods prices is from tariffs. And that's actually good news, because if it weren't from tariffs, it might mean it's from demand.
Ooh, I love that.
We do think tariffs.
What he's basically saying there is like, it's not us. Prices aren't going up because of us. It's because of this man and his tariffs.
Inflation is running just a bit above 2%.
That is as sassy as Powell can get in this conversation. That was pure sass.
If you look away from goods,
Ooh, Trump gonna be mad.
Disinflation in all the
He just did that.
categories of services. So that's a healthy development.
yeah.
So that's what's going on. The expectation is that we will see the effects of tariffs flowing through goods prices, peaking, and then starting to come down, assuming there are no new major tariff increases that are begun. And that's what we expect to see over the course of this year. If we see that, if we see that.
Oh
that
man,
would be
this
something
guy
that tells us,
is indirectly
we
like
can loosen policy.
oh, that's
Also, if we
hilarious.
see something that
Look at his
suggests that the
face. He's
labor
like, "What'd you
market
say?
is not
What'd you
stabilizing,
say?"
and in fact, the downside risks reemerge, or the data just get worse. We'd have to look at both of those. We have a 2-sided mandate.
Oh, if I could, if President Trump does pick
Here we go.
the Fed chairman before May, what does that look like? How would you work with that person? And when's
It's
that
not me,
transition
babe.
take
It's you.
I don't have anything for you on that. That will depend on,
It's so true.
Congress's actions and things I can't speculate on.
Howard Schneider with Reuters. Thank you for taking our questions. Given the changes in the statement and all you've said so far, is it fair to describe risks to both sides of the Band-Aid as roughly balanced right now? And is the next move necessarily down?
Ooh, that's a great question. Yeah, think of that one, boy.
That the upside, again, the upside risks to inflation and the downside risks
Answer the
risks to
question.
employment have diminished, but they still exist.
Answer
there's
the
still some tension
question.
between the mandates. Are they fully in balance? Hard to say. Hard to say.
Answer the question.
We think our policy's in a good place. I've just discussed reasons why we might change our policy.
Say it.
And, we'll just have to see how the data lead us.
Say it.
A minute ago, you said you felt expectations were consistent with your mandate, that the 2 and the 10-year break-evens have moved quite notably in the last
Exactly.
couple of weeks, I believe. Is there any concern on that front?
I mean, I recently looked at all of the both survey.
I have
and
to talk bunker,
market-based
otherwise it's against terms of
short-term
service.
inflation expectations have come way down.
Okay.
They were in a good place at the beginning of last year. They spiked around Liberation Day, and now they've fully retraced in the last few months.
Yeah,
so
but
that's very comforting. In the longer term,
I'm getting
inflation
annoyed, yeah.
expectations have remained in places
Answer
that
the
are very
question.
consistent with 2% inflation over time. So expectations have
No
been
rate
solid,
cuts,
and
no.
they reflect
I didn't think they would.
confidence in the return to 2% inflation.
Means no rate cuts. No, there's going to be no rate cuts for the foreseeable future.
Apologies if this is a little bit repetitive, but in the past you've said that the reason you cut rates was that the risk to the labor market was greater than the risk to the inflation side. Is that still true?
Exactly. Why has it changed over 2 months?
We haven't made. You're right. We saw the labor market weakening, and we acted. And
Yeah, but
I think that was the
2
appropriate
rate
thing to do.
cuts
We
doesn't
haven't-
change
we
it
will
over
always
2
act
weeks.
to
He knows
address
that.
What we see as the economy moving away from our
It
goals.
spiked up on Liberation Day.
Risks to both of the variables are a little less. I think the upside risk to inflation, again, a little bit less, and the
Yeah,
downside
but
risk to
2 rate cuts
a little
over, what,
less.
3 months is not going to change the effect of the
I just
labor
would say that
market.
I'm not making a judgment about
It takes
how,
6 months.
One of them is more at risk than the other, just that the risks to both of them have diminished.
Okay, thanks.
So why would you not cut then?
BIS wrote a paper last summer which concluded that global investors were hedging their dollar exposures in ways that previously they hadn't because of policy uncertainty. Do you agree with BIS?
We really don't see much at all
question's amazing.
That whole story. There's just not a lot
don't-
of data
I
that
don't know.
suggests that there's much to that.
I don't know. I don't know.
Anna Swanson with the New York Times. Can you
Too
tell
late,
me more about
power.
what you
Again,
would need
he's
to
even
see
brought
in
on
the
page,
labor
but I don't know.
market
Yeah,
to
it's,
conclude it's time to resume
this one
easing?
makes no
Do
sense,
you
him
need
not
to see
cutting.
further deterioration in the labor market, or would it be enough for inflation to soften?
So we'll always be looking at both things. And so there could be combinations, infinite numbers of combinations that would cause us to want to move. Certainly, a weakening labor market would be an argument for loosening. But what's happening with inflation? If inflation were at the same time getting worse, you just have a very difficult situation there. So we'll
Right.
be looking at both. Clearly, a weakening labor market calls for cutting. A stronger labor market says that the rates are in a good place. We'll have to be making similar judgments too on inflation, though.
Yeah,
And
he's
if
not going to be
inflation
cutting.
does pick back up and the labor market doesn't show further signs of deterioration, is there a chance that you could raise rates rather than simply remaining on hold? What would you need to see to consider hiking?
We don't take things off the table, but it isn't.
Don't
anybody's
answer that
base
question.
case right now. Anybody's base case that the next move will be a rate hike, but ultimately we'll do what we think is the right thing. But that's not where people's expectations are right now.
Okay, good. Don't. That got me a bit scared there for a second.
Hi, Victoria Guido with Politico. I wanted to ask, you've talked in the past about concerns about the U.S. fiscal trajectory, and we've seen in the Japanese bond market a lot of turmoil recently.
Great question.
In part due to concerns over their fiscal and long-term
Some
economic
amazing
outlook.
questions.
So do you worry that the U.S. could at some point find itself in a similar situation to Japan, whether for fiscal or demographic reasons?
Over time, you've seen that U.S. rates have
Great
remained
question.
They haven't moved a lot, really for a while, but they haven't moved a lot because of what's been
Are
happening.
you looking
in
at the
Japan.
10-year yield? What are you talking about?
So it's more of an over time thing. The U.S. federal budget deficit is, uncontroversially on an unsustainable path. The level of debt is not unsustainable. It's very much sustainable, but the path is unsustainable. And the sooner we work on it, the better. But right now we're running a very large deficit at essentially full employment. And so the fiscal picture needs to be addressed, and it's not really being addressed. So that's important. I'm not in any way connecting it to some sort of near-term market event. But ultimately, it's something we'll have to deal with, and that in the end game, that's where you want.
What are you saying,
kind of a difficult
pal?
thing, but that's not where we are. It's not where Japan is.
Pal, what are you saying?
It's certainly not where we are right now.
Pal, stop saying that.
Reduce the effect of your rate cuts that
Please stop saying
longer-term
that.
rates
Don't
have
say that.
Overall, not really budged that much.
Alvarez, are you
Say
okay?
that,
Thank you so much,
the
Rafa. I'm
thing
pretty
is,
good. Thank you very much.
I mean, technically, higher longer-term rates means less accommodative financial conditions. But remember, many things move longer-term rates. It's not mostly what happens on the short end. There can be
What did you just say,
effects of
pal?
longer-term rates from our moving our policy around. But it's much more.
What's the DXY doing?
assessments
Up
of
or
the
down?
Fiscal path and fiscal policies
can't see at the moment.
and risks and things like that move the 10-year around. You can look back at and find periods where we've been very actively moving the policy rate over the course of a year, and over the course of that year, the 10-year is exactly where it started. So there's not a tight link between 10-year rates and the overnight rate.
Elizabeth.
Bet.
Thanks
Really?
so much, Elizabeth Schulze with ABC News. Republican Senator Tom Tillis, who sits on the Senate Banking Committee, said
If it
he
breaks
won't
to
block any
95,
Fed nominee,
everything's gonna
including
go
the chair, until this
like
investigation into you is
parabolic.
resolved. Do you support this move by the senator, and what conversations have you had with the senator?
I've got nothing for you on that.
More broadly, what would happen to American households
Went up and then
if the
a
Federal
crackdown,
Reserve loses its ability to operate independent from politics?
Ooh, he's gonna answer this one.
Really, the point of independence is not to protect policymakers or anything like that. It just is that every advanced economy democracy in the world has come around to this common practice. It's just an institutional arrangement that has served the people well, and that is to have a separation between to not have direct elected official control over the setting of monetary policy. And
Yes.
the reason is that monetary policy can
I agree with
be
what
used,
he just said.
through an election cycle to affect the economy in a way that will be politically
Damn
favorable. So
right.
This isn't. I'm not talking about the U.S. context. This
Damn
is
right.
every advanced economy democracy of any size. So it's a good practice. It's pretty much
Damn right.
everywhere among countries that look at all like the United States. And I think if you lose that, it's first of all, it would be hard to restore the credibility of the institution if people lose their faith that we're
I think she
we're
was planted
making
with that question.
decisions,
He
only
seems
on the
very
basis
well
of our assessment
rehearsed
of
for
what's
this
best
question.
for everyone, for the wide public, rather than trying to benefit one group or another. If you lose that, it's going to be hard to retain it. And we haven't lost it. I don't believe we will. I certainly hope we won't. But it's very important, and the reason it's important is that it's enabled central banks generally not to be perfect, but to serve the public well.
You're confident it can maintain that independence at this point?
Yes. I mean, I'm strongly committed to that, and so are my colleagues.
Archie.
Good answer. I like the answer. See, these are the things that make you like Powell. You know what I mean?
On that sort of stabilization of the labor market question, how much do you see the weakening we saw the past 6 months, a year, as a kind of data mirage around immigration and the government shutdown and so on?
Data
that's now
mirage,
resolved?
yeah.
Or how much have we seen a kind of real underlying firming up?
Yeah,
of
yeah,
the labor
yeah.
market, do you think?
No.
Well, part of it is, to your point,
Yeah.
part of it just is that labor supply, growth in labor supply has come to essentially a halt from a fairly fast clip of growth over the last couple of years, driven by immigration, and then the halt being driven by a very sudden stop in immigration. So many outcomes were possible with that.
I like how he
supply
picks
came
and
way
chooses
down.
certain
It turns
questions
out
to
that
answer.
demand for labor also came down a very similar amount, maybe just a little bit more, which is why the unemployment rate has gone up. So
Yeah.
I don't know whether that's a coincidence or not, but that's what's happened with that part. But if you look at other,
I think you're
things
wrong
like,
on
for
this,
example,
man.
just to pick a couple.
I think the data you're
Conference
getting for the
Board's,
labor is completely
measure of
wrong.
Job availability that came out, I don't know, was it yesterday or today? But, it shows, it's a survey showing that workers feel like job availability it's a very low reading. Just one reading,
Yeah.
but it's an indication of softening.
Yeah.
People, part-time for economic reasons, which is a category within the
Thank you so
broader
much, Rhodes, for
U6
sharing. It
category,
really means a lot.
measure,
Honestly, it's amazing.
has moved up significantly.
Amazing what you're
So
doing.
There are
Means
lots
a
of,
lot.
and I could go on and on. There are lots of little places that suggest that the labor
Unclear
market
yet if we're going
has
down.
softened. But but you're right. Part of payroll job softening is that both the supply and demand for labor has come down. Growth in those two have come down. So that makes it a difficult.
Yeah, but it doesn't work that way. You can't have supply and demand going down in the labor market. That's just bad.
Where there is no job growth.
Yeah, there's no job
Full
growth.
employment. In a sense, it is.
No, but you're looking at it wrong. You're looking at it wrong. Just because you have full employment, but there's jobs not being created, that's a bad
We
thing.
really feel like that's a maximum employment economy. It's a challenging.
It's-
It's very challenging and
It's
quite
maximum.
unusual
Oh, God,
situation.
no. This is. I don't.
Thanks. And one more on.
I don't think he's right with that.
And the kind of strong growth outlook, or strengthening growth outlook you're now seeing. How much of that is the fiscal stimulus we're seeing from the beautiful bill, the tax cuts, and all of that?
So you're seeing it already. You don't have much of the fiscal. I think the outlook. You're right. It's financial conditions, and it's fiscal policy for 26. But you've got strong consumption that's been happening before financial conditions have been supportive, but before the fiscal effects really are shown. So essentially, the economy has once again surprised us with its strength, not for the first time. And consumer spending, although it's uneven across income categories, but consumer spending overall numbers.
We'll only really see the effects of all this stuff
We're benefiting from the
tomorrow.
from the AI
We might see some
build-out
reaction
of,
in Asia, but we'll see.
Data centers. That's another thing we're benefiting from. But the economy overall, the growth is on a solid footing. It looks
Yeah,
like.
growth is pretty good. I mean, I agree with him on that
It's
side, but labor
it's
is
just the
definitely weak. I
consumer-
don't care what anyone
the
says.
Consumer is filling out surveys that sound really negative, and then spending. So there's been a disconnect for some time between downbeat surveys and reasonably good spending data.
That means they're going into debt. Doesn't mean they're spending something that they're earning.
ABC News. You talked about how consumer spending is uneven. The president calls inflation defeated.
So we're going to pump or dump. Wait, we're still waiting for the full question answer to finish.
Elevated inflation. But you talked about those customer survey or those consumer sentiment surveys and public opinion polls that show that most families say the cost of living is still issue number one.
Yeah.
What is the conversation around the table with your colleagues about how wealthier consumers seem to be driving so much of the economy, and why
Amazing
so
question.
many families still feel like
Amazing
they just
question.
can't make ends meet after 5 years of rising prices? What is that discussion like?
So a couple things. One, there's something to it in that we know that
It's more than something to it.
higher income households that tend to own
They're driving the growth of the
real
USA
estate tend to own
100%.
stocks, securities, and those assets have been going up in value, and increases in wealth do support spending over time. So, and that's clearly a part of the story. We also know that for some time now, for a year or more, we've been hearing from retailers, for example, that serve lower income customers, whether it be food or the big box stores or anything. They're saying the same thing, which is our consumers are looking to economize. They're trading down from brands, and they're buying less, and it's changing their buying habits and that kind of thing. So we're seeing that, and that is a reality of what we're seeing. They're
Right.
still consuming, but
They're consuming things that they need to
they're feeling it in a
consume.
different way. I would say more broadly.
What does that mean? Well, they're going to stop eating. Is that when you're going to start cutting? Is that how it
Through
works?
the Board of Governors, where we talk to small and large businesses and households, and so we do hear a lot about affordability, and we take that very seriously, and we take it to heart, because one of our jobs is price stability, and so the best thing we can do for people who are feeling that squeeze is to keep inflation under control, and frankly, to finish the job of getting inflation back down to 2%.
You mentioned the AI build-out as being positive for economic growth this year. I wonder, as you look at the weakest year last year for job creation of a non-recession year since like 2003, are you concerned about AI maybe supplanting more entry-level work and entry-level jobs, and how does that play into what you're watching about the labor market?
Yes.
So everyone, of course, is watching AI and the deployment, and trying to understand exactly what's happening. And there's a wide range of possibilities. It's hard to say.
Yeah, I mean, like-
And of course, anyone who uses it is amazed at what it can accomplish, right?
Yeah,
So,
I tested that Claude the other day. It was
every
unbelievable.
technological
I've never
wave
seen anything like that
will
before in my
eliminate
life.
some jobs and create other jobs. And it's always been the case, if you look back, wave after wave after wave.
Yeah, but
there
it'll be
will
an
some
initial
disruption, but
disruptor.
ultimately, technology
It'll be an initial
increases
disruptor. A lot of
productivity,
like
which is the
disruption will
basis
happen.
for rising wages, and it may not all happen immediately, but over time, it's what enables incomes to rise over time is rising productivity. So and we always ask, well, this is going to be different, you know, is it going to be different? And we don't know.
Claude saved
And
me
we
about
may
10
indicate,
hours.
see, in the
It's
short term,
I've never. Although, did you hear?
jobs that
I'll tell
have
you
been
a funny story.
eliminated by the
Do you hear about the guy that spent
capabilities
like
today?
10?
We see that.
Claude spent 10K
We just
on
don't
courses.
know what the overall effect is going to be. So how to think about it in macroeconomic terms, it's very hard. You know,
But it's
we
incredible.
can look at
It's
the
truly
aggregate
something
data.
special.
We can analyze, for example,
Yeah,
there's some
look it up. You'll see.
connection, it appears,
One
between
Claude, he
low
connected
hiring
his
rate
bank
for
account to it, and he went and bought
recent
Alex
college grads, and
Mimosi
AI.
or Alex
But
Mimosi
it's not
courses, like
the
10 grand worth of his
only
courses.
driver. You hear large companies, though,
I'm not
saying,
joking,
many
it's
of them
real.
saying that they either won't be hiring for some time, or that they're hiring less, or
Alex
that they're laying people off.
Fomc,
and
you know the one, the
tend to
guy who's
refer
like
to
has
AI,
millions of dollars and he
when
works
they
out all
do
the time,
that.
has
So
long hair.
we're all watching
That's
and
mental,
learning,
more money than
and it could
saying.
certainly have pretty significant effects on the economy, the workforce, and our society.
To give access to something like that to your
We
bank
don't
account,
really
I
have the
guess.
tools to
That's
address
crazy.
the concerns that may arise, but we have a lot of people who focus on analyzing it and try to understand what the macroeconomic implications are, which is our job.
What a day. It's been a long day. I'm tired, boss. So am I, honestly. It's mental gymnastics constantly.
That on inflation, the broad expectation was for a one-time price increase and then for inflation to come down. And I was wondering, is your expectation still for inflation to start cooling in the second half of 2026? And if you could elaborate how far we are from target currently.
These are really good questions.
So how far we are from target is, as I mentioned in my opening remarks, we had 3.0% core PCE inflation over the 12 months ending in December, and that's pretty much what we had the year before. So on net, no progress, but the story behind that is modestly positive in that most of the overshoot was in goods prices, which we think is related to tariffs.
Yeah.
And ultimately, we think those will not result in inflation as opposed to a one-time price increase.
Very, very cool.
That's where it is. In terms of, you asked, no one thinks they will, ex ante understand really clearly, precisely when this will happen. But there's an expectation that sometime
Say fat cat.
in the middle quarters of the year, we'll see tariff inflation topping out. So what we do is when a tariff is put in place, we track the effect of those tariffs over a 6, 7, 8, 9 month period, and you can see,
He's basically saying all of this is because of tariffs, basically.
Reach a place where it's affected the price level, and that's it.
That's basically what's going on at the
Better
moment.
at that, and our estimate is that it'll be sometime in the middle of the year, but I wouldn't look for great precision in that. But we'll be able to see whether things are moving in that direction. I think we will be able to see.
That's a great answer. But we knew that since Liberation Day. After Liberation Day. After.
I want to look outside the U.S. about what's happening outside our shores and how it impacts the U.S. Canada's Prime Minister said last week that there's been a rupture in the global order, and I wonder how you're thinking about geopolitical risks.
He doesn't care about how he's not going to answer that question.
So I can't.
He's not going to answer that question.
On that speech or statement or anything like that. Geopolitical risk for us is a lot of it is around energy, oil. And so far, we haven't, for all the turmoil, oil prices
There has to be one
down, as
dumb question.
so we don't really see much.
What's Powell going to do about that, honestly? It's
Longer
so
than that,
stupid.
It's
What's the point of that?
And, the trade, the economy, our economy has
Happened. Nothing much. There's no rate cuts, but we're just listening to the question and answers. This is after this is where everything happens.
economy has pushed
Just got on. Welcome, Steve.
The
Follow
way
this account as well as my
was
alt
implemented
account.
was significantly less than what was announced at the beginning. In addition, other countries didn't retaliate, and in addition, a good part of it hasn't been passed through to consumers yet. It's being taken by companies that stand between the consumer and the exporter.
It's
So
neutral
that's where that is.
to maybe dovish. I wouldn't say it's dovish. It's neutral.
Thank you, Chair Powell. Jennifer
Be a bit
Schonberger with
hawkish,
Yahoo
actually,
Finance.
because they don't look like they're going to cut.
Quarter GDP growing at 4.4%, and the fourth quarter expected to have a 5 handle on it, as to what the Atlanta Fed is
God,
predicting. At a time when you had a government shutdown, and we thought that was going to shave off some growth, you've also got the fiscal.
I feel like she's telling
tailwinds.
him
You've
off.
Talked about big tax
I feel like she's telling me
refunds
off.
coming, potential tariff dividend.
Oh, man.
How could you cut rates and not spur inflation in that environment?
Well,
Good, okay,
we
she's.
didn't cut rates today, but you know, it would depend. It depends on how fast potential output.
Yeah, I would say
is
neutral,
growing,
cautiously
right? I'm
hopeful,
just
yeah.
In principle, I'm not. You know, I'm not saying
It's
this is
very
what's
neutral at the
happening,
moment.
but, you know, there's growth.
It,
and there's how
they're
fast potential is
expecting it to
growing.
come down
And at a
according to
time
where
of-
they are right now, and they're in a good place,
you know,
which
high
is,
productivity
and
growth,
that
potential output is rising. So it really matters
unemployment and
whether
inflation's coming down. So
potential output is growing as fast as actual
Neutral
output, and it would matter
to-
over time. The
to
numbers you
dovish.
cite were
Neutral
for
to
quarters,
dovish.
and quarterly GDP is you need to look at 12 months because quarterly GDP can be
Yahoo
very
still-
lumpy. You know, GDP was negative in the first quarter last year, so the overall
used by ice cream
over
man.
the year the numbers were nothing like that. You know, it was more in the mid twos for the year.
And how do you explain the divide right now between strong economic
She
growth
scares me a little.
and the job market? Is it productivity that's filling the gap? And is productivity being driven by AI at this point?
So we. There has been, you're right, there has been a
How
divide
is-
of solid growth, but
how is
what
he
looked
going
like
to
a
know that
weakening
answer to
labor
that
market.
question?
And that can be
Back to the
explained by,
stupid questions.
by rising productivity. But I would say we do see signs of, certainly of the unemployment rate stabilizing. So it may be we're seeing the beginning of the resolution of those two things. Also, as you probably know, the lore is that when GDP and the labor market get into an argument, in the end, the labor market data is more reliable. GDP data is just very hard to
Yeah, it
to
makes
collect
sense,
and
yeah.
understand. But nonetheless, I think
If the orange
we may be
man
seeing
leaves
that
tariffs alone,
that
things will be
tension
fine.
resolving a little bit.
Eli,
Too soon to say
that
with
is the
any,
most truthful
confidence, though.
statement of the evening right now. Completely.
Matt Egan with CNN. Chair Powell, after today, you have 2 meetings left as Fed chair. You've obviously experienced a lot during your time as Fed chair, served under multiple presidents. I'm wondering what advice you have for whoever your successor might be.
Good luck. He wants to say it.
Honestly, One is
That was the most good luck.
you know, stay out of elected politics. Don't get pulled into elected politics. Don't do it. And that's another thing. Another is,
That's exactly what he was gonna say there.
you know, our window.
Good luck, my
into
friend.
democratic.
I'm actually
accountability is
19 years old.
And it's not a passive burden for us to go to
I got
Congress
Fed
and
chair miles
talk
on
to
me.
people. It's an affirmative, regular obligation. If you want democratic legitimacy, you earn it by your interactions with our elected overseers. And so it's something.
He's basically saying don't be
I
don't
have
be
worked
a
hard
lucky
at it,
to
so,
the president.
And the last thing is, you know,
Which he's going to be.
It's easy to criticize government institutions so many ways. I will tell whoever it is, you're about to meet the most qualified group of people you not only have ever worked with, you will ever work with. And when you meet Fed staff, and not everybody's perfect, but there isn't a better cadre of professionals more dedicated to the public well-being.
Damn. Great
Thanks
answer.
for that answer. If I may follow up.
Damn.
As I'm sure you've noticed, gold and silver prices have experienced historic gains of late. And I'm wondering how much attention, if any, you pay to those moves and what
None.
message you may take from these significant price increases we've seen for precious metals.
Don't take much message macroeconomically. The argument can be made it's that we're losing credibility or something. It's simply not the case. If you look at where inflation expectations are, our credibility is right where it needs to be. So we look at those things. We don't get spun up over particular asset price changes, although we do monitor them, of course.
Nicole, for the last question.
Say crypto. Say it.
Nicole Goodkind-Barron's.
Say crypto.
Some prominent critics have charged that the Fed's economic models are somewhat backward-looking, but should be more forward-looking, incorporating things like productivity increases from AI. How do you incorporate current and future developments into your analysis and decision-making, and do you have an answer to those critics?
Yeah, so
That's the last question.
by and large, those criticisms, as somebody on the inside, they just don't make sense, and I'll tell you why. Every FOMC participant writes down a forecast every quarter, right? The summary of economic projections, and that's the basis for how we think about the economy. So, and the other thing is, what an economic model can do is it can grind up all the data for the last number of years, 50 years, let's say, and it can identify what are the relationships between variables A, B, C, D, and all that kind of thing. And it can tell you if you change one of those variables, this is what should happen in the macroeconomy. That's just the way it works. However, the structure of the macroeconomy is constantly changing. For example, we hadn't had a pandemic in 100 years. It wasn't in the model, and we knew it from the very beginning. It was not in the model. A trade war of this scope, we'd never had that in 100 years. And so there's great uncertainty at different points. Another thing I'll say is, when it comes to, technological developments that raise potential output, some kind of technological revolution, like happened in the 90s here and like maybe happening now with AI, we're all over that. And, everyone studies those periods, and, we're very clear-eyed about the possibility that this higher productivity may persist, and also that it may not. We're not, no one's sitting here unaware of the possibility of higher productivity. We've been talking about it for 3 years. It long predates the current situation. It's been going on for 5 or 6 years. We've had productivity higher. We've been talking about it that whole time. So it's very much on our minds, and we are well.
I'll do a recap in a second.
That higher productivity means higher potential output, and it changes the way you think about potentially inflation, growth, labor market, and all those things. That's all in our models. I mean, if it's just a question of using better models, bring them on. Where are they? We'll take them. But I think, we certainly are in contact with anybody who does economic modeling, and we're always looking to do better at that. But that's how I think about that.
And just a quick follow-up. We've been talking a lot about tariffs and passing through, and we've been talking a lot about them for the past few months. The trade landscape is still in a constant state of flux. Announcements, threats, negotiations, they're all frequently changing. So I'm wondering how you actually track these, what data or channels are most critical to follow this in real time.
Trade?
Yeah, the impact of tariffs and how they're changing.
Yeah, I think our staff has done a really nice job on that, and they've kind of put it together in real time. So as I mentioned, a tariff gets put in place, you can pretty much track.
Is this guy listening and pretending he understands what they say? It's true. That's exactly what I'm doing. I have absolutely no what's going. Is this English?
It was very much of a forecast. Now it's every cycle that goes by, it becomes more informed by actual data, and our forecasts were not far off. What changed was, as I think I said earlier, what was implemented was smaller than what was announced. In addition, we didn't see retaliation internationally, and I think people did generally expect that because we saw that in the past, and that really mattered too. And then the other thing is that pass-through didn't know how fast that was going to be to consumers, didn't know how much exporters would take, how much companies in the middle would take, and how much the consumer would take. And it turns out it's a lot of companies in the middle who, by the way, are pretty strongly committed to passing the rest of it through, which is one of the reasons why we need to keep our eye on inflation and not declare victory prematurely.
Thank you.
Well, I think that's the end.
Okay. Thank you very much.
Interesting. I mean, look. Honestly, I would say that's pretty good. That's a pretty good FOMC, to be honest. I mean, he's pointing towards unemployment, stabilizing, inflation stabilizing. He's talking about how right now they're maybe potentially above what the neutral rate is, which means that there's possibly a potential for rate cuts, maybe depending on what's going on. And he's basically saying, look, we're good. Just don't mess it up. Like, don't mess it up. It's basically, that's what he's saying. And when you say don't mess it up, we know who he's talking about. That's exactly what he's talking about at this present moment. Just don't mess it up. What's the dollar doing at the moment? To be honest, we're only really going to this. I mean, the S&P 500 is going to react positive. I think tomorrow will be a mostly positive move. Honestly, because that was surprisingly, like, they've stopped cutting, not because of wait and see, there's potentially something bad coming around the corner. They basically are cutting because, they stopped cutting because we're pretty good. Like, we are, all the numbers and everything else looks pretty solid. Although I am going to push back a little bit on that employment data, especially as he was saying, job creation is lower, but employment is higher, which means that it's that the jobs that are available are all taken. Yeah, but that doesn't mean that everyone is employed. It's this sort of, like, it's hard to understand. I get where he's coming from, but it doesn't mean that there's not unemployment. There's not people who are trying to find employment. So there has to be this sort of careful balance between whether people are actually applying for unemployment and they're trying to still find a job, and there's actually a kind of a larger spectrum of unemployed people, and the ones that can be employed are the ones that are that are potentially mid to higher earners, that are actually running and pushing the economy forward. The spenders. It's in this sort of, that area, I think, is where his not necessarily 100% aspect of what he talked about, but it looks pretty bullish. That's a pretty bullish FOMC if I've ever seen one. And he did his little sort of cat swipe that he did as well. I would not be surprised if we don't see a rally tomorrow. Honestly, possibly Asia, because that was, look, the market still needs to absorb what he's going to say to make the moves that needs to happen. But I would not be surprised. I would not be surprised if we, in one way or other, break above the 3.4 tomorrow. But again, we don't just move with what we understand from news. News-based movement is not going to be what's key. Brand, but neutral sometimes is good for the market. The market likes neutral and boring. This is technically neutral and boring. It's like we've done. There's another thing I will push back on, though. The fact that he said in December, before December, that the risk to the economy has been weighted towards unemployment, and then they did 2 cuts, and now it's not. That is not right, in my opinion, because it takes longer than 2 months for a rate cut and the effects of that to actually filter through the system. Jerome Powell overall done a great job in his term. I agree. And look, you need to understand, Bush put him in. It's not like he's like some sort of completely political person. He is, as he said, and I like the way he said that, he is there for the benefit of the people and the economy in the USA, and he's adamant, saying, like, this needs to be separate. Although the orange man is going to try his best to not do that. No, Trump put him in his first. No, it wasn't. Was it Trump? I thought it was Bush. I thought he was from the Bush era. Yeah, maybe. Maybe I'm mistaken. I don't think he's a clown. I don't think he's a clown. No, I don't think he's a clown. Oh, you mean Trump's a clown? Wait, who's a clown? Let me be sure. Who put... All right, you're all right, pal. Sorry, I apologize. Why do I think it was his name? Anyway, yeah, Trump put him in. I'm mistaken. But yeah, look, I mean, so that was I'm honestly, that would give me confidence to potentially play in the markets a little bit. But I will say this. Yeah, no, Trump did. I agree with you. Yeah, I will say this, right? And I'll say this very, very clearly. It also rhymes from a cyclical perspective. I expect an upward move after this. I'm leaning towards that side as well. But again, we play with the graphs and the support, resistance, and all those all the key areas. We're finding support in key areas. We have resistance at the 3.4, so we could see something like this, right? We could see something like that. That is something we could do. And if the big man doesn't do something, and this is the caveat, it's always within that parentheses of what's gonna happen. If the big man doesn't say or do something, please don't do something. Just please don't do something. We could see a rally. I can't do any of that kind of stuff anymore because there's a hacker after me, and any type of thing that is even questionable, he will ban my account. Yes, exactly. If Trump leaves that word alone, we'll be fine. If he doesn't do something like threaten tariffs, put tariffs, do some sort of, incursion into the Middle East, do any of those things, a tweet won't matter, depending on what it is. I don't think it'll matter, but if he doesn't do something that will affect the greater economic outcome or profit margins or supply chains or something on that level, then we could technically, I just want to be very cautious about me saying this because this guy has a knack of spoiling it, right? We could technically have a potential dip and rip type of moment. And why I say a bit of potential dip and rip is that sort of manipulation and then distribution up into the 100,000 level. Potentially. Hey, Iris, do you see the Head and Shoulders? Yeah. Of course, I've showed them many times before. This is. I've always said. This has always been the plan, right? Always been the plan. This area here, the 100,000, I think is going to be tested, right? But we could go up to 108. It's 100. Basically, it's this 100, 104, 108. That's where I think around this level here, there's going to be mass distribution down. Maximum. Partly because of the well accumulation that happened around the 99,000. And it looks like that might start next week. I don't know. I love Are We Bullish? It's it's pretty bullish. That was a pretty dovish thank you so much, Chris. That means a lot. That was a pretty dovish FOMC meeting. And there were moments you could tell that he would he was twitching to say stuff. But yeah, that was pretty interesting. Today's chart looks a lot like March 22nd. What do you mean by March 22nd? Oh, you mean of last year? Yeah. We could see that. I mean, we'll see. Look, we'll see. I still the ultimate Hail Mary, right? And this is what I just want everyone to be very, very careful, right? Very careful, is that when we start getting around these areas, if we get here, a lot of people are going to be late longing this stuff. Be clever. Please be clever. Don't fall and get trapped in these type of scenarios, right? If we regain these upper levels and hold here, then potentially we could move. But we could do this. They're going to try and trap as many people here as possible. They are going to do a mass liquidation event at some point. right? And I was talking to someone today at the event, and he was like, and I was like, oh, I bet you there's gonna be a mass liquidation event. And what he said, he was like, it's probably gonna be Baron Trump's coin, isn't it? I was like, don't say that. Why would you say that? Why would you? No, I don't. No. Please don't do that. Do you have any positions open? I haven't been able to do any look at any of the. I almost called the Fed chairman was cute today, soft and warm. Yeah, it was. Now I've been in a crypto event for like sustainability and some really interesting people. I met a bunch of crypto mining companies that actually get electricity from a dam in Somalia or something like that. It's really interesting things. Like it was a really cool meetup. Really like proper powerhouses in the industry. I became a little gifted for the first time. Chris, can everyone like put I don't know what they call, put the ones or the high fives and give some love for Chris. That means a lot, man. I really appreciate it. Chris, it means a lot. Honestly, you guys are making me blush and like feel all like fuzzy inside. Yeah, Chris. You know what that means. Yeah, Chris. I'm partial to a rose, but a little star. Oh man. I've got nothing open at this present. I haven't had a chance to look through anything. As I said, I was going through an event. But if you're, yeah, that's one thing. And gold is going to move. Gold will always, I think, gold I have no issue with. I think gold is going to continue. Man, gold, it's done 3% today. Man, love, yeah, like to all you guys, got 3%. Hey mate, the good bugs are calling for 10k gold. Someone told me 7, and I was like, you're nuts. There's no way it's getting to 7. But wow. I mean, 3%. Look, what are we? We're at 3 and yeah. So today's been 1.5%, but that's a wild move in gold. What's silver like? Yeah, silver's gonna move. I mean, but silver is getting a bit. Anyone who trades this, right? Anyone who trades silver. Yeah, you have to be nuts. Like, you have to have some level of cojones to do this, because the swings on this thing are, I mean, like entire market cap swings. Like we're talking about like enormous levels of swings. Like we're talking country GDP swings at the moment of silver. Like that's the moves that's moving on here. I mean, this is on a different planet of money that's moving here, like different planet. Yeah, 10% of save. Yeah, exactly. We're talking like it's that sort of you know when it's been traded and you're sitting there going, yeah, that's a lot of money, man. Just please don't correct. Don't do a 50%. Just don't do that. I know it's absolute insanity. 3% is like 1 trillion added or something. No, 1%. Bro, right. 1% in gold movement at the moment is the entire cryptocurrency market cap. So it's moved 3 entire market caps of our industry in gold. That's the movements we're getting. We're getting trillions of dollars moving. Like, it is wild. It's wild where these things are at the moment. Like, what? It's actual wild. Look, and it's like mooning. We're at full meme coin territory. Look, it's Pepe. Do you know what I mean? Look at that. It's penguin coin. It's penguin coin. It's absolute insanity what we are in right now. But I'll say something like I mean, look, gold is a currency, whatever. I mean, it's basically people moving away from the dollar and all this kind of stuff and holding it as a reserve and a reserve currency, gold, whatever. It's currency, right? Silver is my problem. Silver will end up being very inflationary in the market if it continues in this level. I did a video, by the way, if you guys want to go and check out on the Insta. I do all my videos there right now, right? But if this holds, I'm under your bed. Thank you. You're welcome. I mean, I'm glad you're not on it. Under it's fine. Just on it is it. Anyone saying silver's gonna correct soon, do more research. I'll say this one thing and I'll leave it from there because I've had a bit of a crazy day, right? I'll say this. If silver, Steve, with your eyes open, my friend. Okay. You're welcome, man. No problem. I sleep with my eyes open always anyway. My wife gets freaked out sometimes because I'm staring at her, but I'm actually asleep. I need to get back in if it's moving up. Where do you think good entry? I'll have a look at that. I'm going to look at that. Actually, let's look at whiff. Let's look at a few coins, and then I'll head off with my... let's go here. Actually, where's my... Yeah, here we go. WAF. My WAF thing. Is it moving? It's kind of moving. This, don't be too wedded to a coin. It's kind of moving. I wouldn't say it's moving yet. Gold today has 5 point. It's on. Hello, Mario. How are you doing? Nah, I'm just kidding. Love you, bro. Man, it's okay. You're the man. I love you. I appreciate it. No, seriously. You're more than welcome to come and yeah, everyone's welcome. I'm actually a nice guy. People don't believe me, but I really am a genuinely nice person. Like I'll help out anyone that deserves it, or anyone that needs help. I'm always there to help out, always, no matter what. Right now, okay, then send me your address. Bad person I follow. Thank you so much. I'm not going to send you my address. I mean, I don't really know who you are. But I will help out in any way you want me to, by all means. Honestly, in any way. People don't believe me, but whatever. It's all cool. Yeah. So what else should I look at? Let me look at a few more, and then I'm gonna head off and try and find a corner to sleep. Oh, let's look at Sol. Sol was a bit slow today. Sol's a bit. It's lagging a bit. I don't know what's happening with Sol. It's lagging a little bit. Although it's finding support on the Monday high, which is good. What we could see a test of the Monday high and then move up from there, because it's still showing a lot of support. Like this is strong support that we have right now. Although it is a horizontal. I mean, like a horizontal, so it doesn't really like. You know, okay, I need your thoughts on XRP. Will it move to $3 this year? I'll get to that. Let me look at XRP in a second. But this is looking relatively good. I would not be surprised if it doesn't bounce from the Monday high. So around the 1.254. Wait for the confirmation on that though. Right? So if it bounces from there, because we have produced a higher high, right? We have produced a higher high. And I would not be, let's see, what would be the 50% move of that wick? I'll call it that wick, that move. Yeah, so we could get this. Look, this might happen. This is usually what happens, right? So wait for the reclaim. So what might happen is this. If you get that, and that will shoot out like that. So she said, all right. Yes or no question, brother? What do you mean? I don't know. I need to look at XRP. I don't know where it's sitting. So something on that level. But I'm looking at it through the lens of a positive move. But this looks positive. Still holding it. It just must not break this trend. Must not break this trend. Let's look at XRP. Let's see what XRP is up to. XRP still looks, for a coin that is, like its base, its support band is so strong. This support band is so strong. Like it's so strong. And it looks really good. It looks really good. Really, really good. Yeah. It looks really good. I mean, I would not be surprised. Let's look at the lower time frame. Around the 1.9, I think this will start to rally. What you need to be careful is when it when it's coming towards a Monday high. That area there is a level of resistance, so we might get a pullback around to the 192, and then if it can regain this area, this thing's gonna run hard. $2, possible, very possible, very possible. What do you think of Sol? Sol looks good. Everything looks relatively good, and it's holding support. Market is boring, time to sleep. It's a bit boring, but tomorrow I think we'll get a lot of movement. I think the market always absorbs, maybe even Asia. I think Asia might start moving this market actually. IRS, bruh, gold and silver not letting Bitcoin go anywhere. It will do. There will be a point where it will. If you want to watch that that video, you should definitely check it out on my Insta. I also dropped another one today about the inflationary effect of silver. Silvers are great, but we don't want this to settle around and sit at these 130 to 150 marks for more than 6 months. If that happens, then we're going to start facing inflation, and the Fed may not be so dovish. Can you look? I looked at WIF. I look at Pudgy. Let me look at Pudgy. Page, I call it. They all look really good, man. All of them look good at this present moment. Like, they look good. They look really good. They look good. These look very zoomy at this present moment. You know what I mean? Yeah, they look. What was my saying? I haven't said that in ages. They look very sendy at the moment. They're looking a bit sendy. They all look a bit sendy. Yeah, they look a bit sendy. Looks like USD it will break down. Let's have a look at USDT. I mean USD. You mean USDT or USD? You mean what's it called? DXY. Ooh la la. Ooh la la. Alt season 20. Maybe a start to that after May. I think the bottom will be May. I think the bottom will be May, for sure, in my opinion. I will say this, right? Yeah, the dollar looks like it's... Well, let's see. It needs to pass... It's reclaimed the 96.36, right? So if it finds support there... Let's see. Be careful with this, right? This could still rally a little bit, which could cause a bit more of a pullback. I'm thinking a bit of a dip and rip scenario with everything. If we look at total, where's total? The last thing I'll do is look at total and I'll tell you. I mean, look, we have a... But do we? We don't have a break of structure yet. Not yet. Not yet. Break of structure is 3.04. So we play as if nothing has changed at the moment. We play the market. Still, it has not. So this could have a bit more of a push down, possibly towards the 2.97, around that area there, and then move from there. Right now, yeah. We could still have a bit more of a pullback, possibly tapping this Monday high on the 30 minute. Yeah, I say around there is a real possibility for it still to happen. Confirmation is everything, right? Confirmation is everything. What would you do? What would you enter along on right now? Right now, I'm still didn't miss the call in the pro group. I wasn't, as I said, I was in an event today. It was, my main man was holding the reins today. But we're building something really, really cool for you guys. Like, it's so cool. I'm so excited to get to bring it to you guys. Honestly, it's a really cool thing. Yeah. So technically, right now, we're not. I wouldn't say full bull at this present moment. We could still have some downward movement still, potentially. Potentially could have still some downward momentum. And I think this Monday, so I would say look out for the area between 2.97, this area here. I think that would be the area of support and move from there. Bossman, hello Lamar, how you doing? Wrap up the pulse reach. Okay, very, very quickly. Unemployment seems stable. Inflation seems stable, going down both equally. The market growth looks buoyant, and they're looking like they're holding potentially the neutral to neutral plus of the rates, and they're going to wait and see and probably see growth from that moment on. Pretty dovish, neutral to pretty dovish. That's what I would say. So yeah, it looks pretty good. But again, don't play the news, play the charts, and let's see what the charts are doing, and we can move on from there. All right, look, guys, I absolutely appreciate all of you guys being here. It means like a spectacular amount. Honestly, you guys are unique, and I appreciate you all greatly, more than you guys know. Trust me. So I appreciate you all. Thank you for all the gifts, the likes, the coming to see us, and all that kind of stuff. You guys are, yeah, cool. Ladies and gentlemen, all of you are absolutely incredible, right? And you guys are so awesome for coming and joining me on the tube as well. And I look forward to bringing all the cool stuff I can potentially bring to you guys in the coming near future as well. All right. I'll see you guys tomorrow. Yeah, we'll see you guys tomorrow. Let's see what the markets do. I'm going to try and incorporate, by the way, if you guys want to check out and join the tube, to do a pre-New York Open stream with our main man with KB, right? I think we're going to be doing something on that level where we can have a understanding of the market, pre-market moves, understanding of what's going to be happening there. You guys will start to the people in our community will start to meet him, and you see his expertise in the market and what he can bring for everyone. And then we can play from some of the plays and the trades and all that kind of stuff we're potentially seeing, and you can have an understanding of what we're looking for in the market. And it'll be more of a trying to find a trade live as we go along type of deal, right? That kind of stuff. But look, if you want more of that, go check out the Learn by Alvarez and all that kind of stuff. Again, I will never message you. I will never be the one that comes to try and get anything from you. If you get any of those messages, which probably you'll get 1,000 after this live, that ain't me. All right, you guys are incredible. I appreciate all of you guys, and we can see where we go from there. All right, good night. Take care. Love, peace, and all that affection and stuff. Take care. Take care. Take care. All right. Now, for you guys on the tube, right? You guys are absolutely incredible. Our group is almost done. We've done the deal with around the 3 o'clock mark, because the highest volume is between 3 to 3:30, around that time, right? We have all the transactions and the deals done with both MEXC and WEX. You guys are gonna be getting like sort of sign up bonuses to competitions to the whole thing. We're having our own whole section being built on the platform, which is going to be absolutely incredible. And we're going to be making the group, as they say in my home language, cheap as chaps, right? It's going to be cheap as chaps for everyone to be a part of it. And even if you don't want to be, you can be a part of the initial conversation from there. If you want YouTube to notify you, you need to press the bell button on the YouTube. That's the only way that it will notify you on these type of things, because it works on your normal search algorithm. That search algorithm is going to be what will be key. All right. Okay. You guys are incredible. Love, affection, all that kind of stuff. And I'll catch you guys later. Peace and